Price with Thrive Mortgage. Today is Friday, the 3rd of March. I hope you're doing well. We saw interest rates kind of racing higher yesterday. We saw rates over 7% yesterday in the Mortgage News Daily tracking poll, 7.10% in fact. Now since then, we've seen a nice rally in the bond market, pushing prices higher, and we saw yields come down on a national average to 6.97 for a 30-year fixed conforming. That's indicating the bond market's a little bit oversold at the levels it's at now. And I think the bond market has got a few jitters, frankly, around where we're going to be headed next week with some economic data that's coming our way. Non-farm payroll comes at us on the 10th, and CPI comes at us on the 14th. Either of those or both of them have a really strong potential to move the market either way. Y'all, if we see that non-farm payroll number revised sharply from where we saw the last month's reporting, then that could be very, very good for interest rates, and we could see significant improvement on that. And of course, the reverse is also true. I'm talking to a number of folks that are expressing concerns about getting into the market at multi-year highs potentially in rates. And that's a view that I'm extremely sympathetic to, but at the same time, I think we need to explore it, because if we see interest rates come back down, let's just say they move a point lower, is it conceivable that pricing is then going to become significantly less flexible on the houses that we're looking for? We already have fairly tight inventory. We drop a point in rate, y'all, which a lot of folks are expecting we'll see very much at least that by the end of this year. Some are predicting quite a bit more, some are predicting less, but I'm kind of in the camp that we'll probably be significantly lower at the end of the year than we are right now. The question then becomes, should you wait to buy? Well, if you do, a couple of things we know. Rates drop a point, we're gonna have a lot more buyers in the marketplace, y'all. We're gonna have already tight inventory, and we're gonna have even more buyers competing for that inventory. So I know this is sounding a bit like that I'm beating a dead horse here when it comes to this statement, but folks really should marry the house and date the mortgage, because this is a circumstance where if you wait for rates to improve, you're going to be in a much more competitive environment. And might you pay, 7 or 8% more for that house? Because that's what we've seen in purchasing power lost, y'all. $400,000 house just got about $30,000 more expensive over the last 30 days. Well, if rates improve a point, is it conceivable that $400,000 home might cost you $430,000 to buy it? Yeah, I would say it very much is. If you can find it, and that's the other side of that coin, is we may have an inventory situation and a competitive bid situation that is so extreme when rates do start coming back down that finding the house that you want without compromise could be a real challenge. So I'm more in the camp, y'all, of finding the house that you want while the competition for that house has frankly waned a bit. Find the one you want, buy it, and then if rates improve, refinance it. Again, you're not married to that mortgage. In any event, I'm going to continue to keep an eye on this, looking forward to these reports that are coming out next week. They are going to move the market one way or the other. It's going to be interesting to see how we go. I frankly think that we may get some nice improvement this next week, so I'm keeping fingers crossed for that. And as always, I will keep you posted. Stay safe, stay blessed. Have a great weekend. Talk to you next week.